Wednesday, September 11th, market analysis, Stan Ehrlich. Good morning. About 10:02 California time. And we have a nice rally in the stock market indexes at the moment. So, my opinion has not changed, but that's my opinion that we're going to go down to the October lows. So, in general, we have started to head lower, pretty obviously. And in some cases, there's a double top formation, very plainly developing, not fulfilled, not completed, but starting, it looks like. But the rally we're having today is a little unexpected. It's more than I thought it would happen. And we do have some bullish reversals in the QQQ and the NASDAQ futures at the moment. So let's take a look. If we get stronger here on the E-mini, we would have been oversold within the allowable past days. And if we make a new high higher than yesterday's high, which we actually have already done slightly, all we need now, and we're only down a little bit, about 8-9 points. All we need now is for it to close above yesterday's closing price. And we will have a completed bullish engulfing, actually very similar to what happened on August 8th, not to imply that the market is going to do after today what it did after August 8th and rally all the way up to there. So even if we do have a bullish engulfing today, I'm inclined, now this is personal opinion, of course, to believe it's not going to work very well, and that the rally, if we have one, will be short-lived, and we're still going to go down to approximately 52 or a little lower sometime in October. Now, that's my minimum downside objective. I basically believe at this point that the double top that's building in some cases might be triggered in the next week or two, and that's plenty of time to go down even more. And that's getting below the low that was made on August 5th for the E-mini. And getting below that low on a closing basis would cause me to believe that the downside, which is my maximum downside in October sometime, 45.50. But we're running, every day it doesn't develop more weakness, etc., the market's buying more time. So I'm not going to be particularly surprised if it doesn't, say, double bottom out around 51.50 in October. Because now, at the moment, it looks like there's a little bit of a reversal developing. Next chart. We're high and last for this rally, which has been substantial. Keep in mind that we went all the way down to the lows, almost exactly the lows that were made last Friday, the low of this break. And at that moment, California time, 7 o'clock and 50 minutes, a little before 8, an hour and 15 minutes ago, we looked like we're about to make new lows for the whole move. But something happened. I'm a technician, not a funny mentalist, so I'm not particularly interested in what happened. But the market found support, turned around, and now a very overbought rally got up in the high 80s on a 1-minute basis, 5 actually minute basis, sorry. And that's topping out territory. So it just might top out again where it did earlier today, yesterday, and essentially the same levels late in the day on Monday. And that's, in fact, the case in this area to slightly higher, going back to September 3rd. So we really need, if this reversal is going to happen in the first place, second place, it's going to get follow through to really rally above 55.65 in order to get something much more bullish going. And I don't think that's going to happen. Bullish reversal, ERSignal today or not. Okay. No particular signal today in the spider yet, but it can't have a bullish engulfing signal because it would never reached overbought, never reached 25 in my custom RSI. And therefore, even if it has an outside up day, which it's close to having, it won't turn green. Next chart. We've got a previous short position that we finally got stopped out of on the spider late yesterday after my YouTube around the high, and we took a nice profit. Now, the market came down this morning, did not make a lower low than the lowest low for the break, which was on Friday of last week, but it did get below Monday and Tuesday. So today is the lowest low for this week so far. And if it gets above the high of yesterday, we will have an outside up day. Just a second here. And that will cause a bullish engulfing, but it won't turn it green because we didn't get oversold on the daily data chart. And the daily data chart would be this one. And it came so close on September 6th, but it really didn't make it. Now, next, daily data on the QQQ. We do have oversold on Friday of last week, turning it yellow. That means oversold or overbought on the way up. There's overbought on the highs, yellow. Therefore, when we got below yesterday's low, we had already been this morning above yesterday's high, and all it needed for my strategy is to get up above unchanged, and it did. Now, it needs to stay there. If this symbol, the QQQ, closes lower today than yesterday's close, that green will disappear. It will not have an outside up day. It'll have an outside down day, which is normally bearish. And that's fine with me because I am expecting more of a break, as you know. But right now, things look a little bit different. Maybe this is going to rally up to 467, 468. That's about the best I can justify. I'm actually going to take that line off the screen. And there's a possibility of it being a little bit more, but I doubt it. And that's more of a rally than I think we're going to get just to begin with. But hey, a buy signal is a buy signal. System's going to go long. And here is the new long position on the QQQ, buying it right about, wait a minute, let me expand this a little bit more. And there's a 5-minute chart. Yep, we're long right about here, 458.85. Small profit momentarily. This could be either the scalp trade or the overnight. They start out the same. They track the same, except I know that this is the stop for the scalp trade because it's much, much higher than the stop for the overnight, which may not even move for a day or two, or it could start moving today if it got strong enough, quick enough. But it's meant to be slower for the overnight trades. The scalp is meant to be much tighter. So if we do make a little bit of new highs, our scalp trade may have a stop that protects a profit. Now, if it closes without getting stopped out, we will be getting out on the close and make a profit. Doesn't have to hit the stop. Remember, it's a scalp. It has to be out on the close or earlier. Next chart. We have an outside up day in the NASDAQ futures also. And same kind of conditions. Too bad we didn't get short, but there's reasons, code reasons. At the top, we got long basically on the low day. We got short on the high day. We got short on the high day. We got short, but it did lose a little bit of money on the high day. And those are, the last several trades so far pretty good this year. That goes back to May. That's a small loss back in February. Okay, let's look at the detail here. We've got first, a rally up above yesterday's high. Second, it went down low enough to get below, and I'm losing my cursor here sometimes. Come on, crosshair. We got lower than yesterday's low and even lower than the day before yesterday, meaning Monday. So this bullish engulfing buy signal we got right now, official buy signal, is doing pretty good. I didn't expect this. I'm not looking for a big rally. I'm not looking for new highs for the move. I am looking again and again, I say it, for some sort of low. And I think it's going to be a new low for a few months in October. So I'm not super enthusiastic here. Regardless, if the strategies are turned on and functioning, we're going to be long, just like on the daily data chart. Looks like I haven't turned them on here this morning. So We're long the QQQ and the NQ, September futures contract for the MQ. Now on the YM, we made a new low for the whole move down since, of course, the early part of September. It could have a bullish engulfing. It wasn't oversold. It won't turn green as a result. But this is a pretty darn decent looking double top so far. The two highs where we did get a buy sell signal on the first high exactly July 18th. Unfortunately, we missed one getting short on September 3rd, which was a bearish engulfing, but conditions weren't perfectly correct. Not overbought, super close several times. But the rules are rules. So I have to be looking for a small rally here. Maybe it's going to be something much larger, and I don't expect that. I'm not guaranteeing that there's a low in October. It just looks highly likely. Next, YM did make a total new low for the move down, is not that close to getting higher than yesterday's high, which is way up here. So this is the least likely, along with the, I'll say that definitely the YM is the least likely to have a bullish engulfing. What about the Russell? Oversold, yes. Close to yesterday's high, yes. Not quite above yesterday's high. If it does, it'll turn green, and that'll give me a buy signal we have at the moment in the QQQ and the NASDAQ. But remember, they change to no signal if it doesn't close higher than yesterday's close. Mandatory. Right now, they are higher than yesterday's close. So right now, it looks like we could have a signal, but it depends on the close. Next. And right now, we are in trades that get handled appropriately, whether the signal completes or not. So that's all in the code. I've been doing this for many decades and developing this strategy for over 15 years. The Russell 5-minute, that'd be a little bit of a breakout also if it got above today's high earlier. Then it has to get just a little bit stronger to get above yesterday's high. And it's oversold, so that would generate a green. Okay, what about bonds? Bonds are overbought for the last 2 days. I have been claiming that they're trying to top out. I'm still going to say the same thing, but you can't prove it. This market is still making a new high, except it is lower on the day by a little bit right now, 10 ticks, and it could have a bearish engulfing, which means it will turn red, and I'll get an official sell signal, which still doesn't guarantee anything, but that's what I look for these signals. And these signals are sometimes extremely profound. October 23rd, 23, bottom of the bond market, even to the day, even to today. Okay, so maybe a sell signal, but overbought for the last couple of days. Maybe a double top, needs to start going down. And I am looking for a low in October in this green circle. Next, notes, double top possibility, overbought, yes. Possible downside reversal, down 10 at the moment. Looking for a bearish engulfing, not happening yet, but could. And it could happen in the next several days too. It doesn't have to be today. I just don't want any more strength. So the double top is very plausible here and now in bonds also. And yes, I'm looking for a low in October. And yes, it's going to be inside this green circle if I'm right. Crude oil. Oversold for the last few days in an area of support, very significant. Doji today so far, up on the day 1.94. So we could be turning around. Fortunately, it didn't make a lower low than yesterday, so I'm not going to get that green bullish engulfing. But it still could be turning around. How much? Rally back up to some resistance of 70.25 and maybe a little higher up to this little resistance of 73.25. But I'm bearish. Next, natural gas did give us a buy signal at the very low day and two more recently. Now, we did make a new high today. Yay! And it looks like it might have a new high close. It's right there right now. So a little bit more strength would be a close, highest close since the lows and our buy signal. So I'm liking this. It's coming along a little slow, but it's coming along. What am I going to get? I think it's a move up to 2.5 and maybe a couple of resistance levels higher. If this double bottom formation, and that's what I think we've got here, develops properly, then the minimum upside objective would be 2.9, 2.88, something like that. Now we're looking at the oversold condition in heating oil. Very broad, huge generalized support area down here. I'm wondering if I can make this a little bit more likely to see, and I guess I can. There you go. And now we should be able to see this. A little better. Thank you. Okay. So looking for a turn. We do have a new low today. So if it gets above yesterday's high, we'll have a green bar, but it's not close. So it doesn't look particularly likely. But you know as well as I do, if you've been watching these markets long enough, you never turn your back on them. And that's the reason why algorithms, strategies, but they're hard to write. They're hard to get right. They're hard to duplicate exactly what you think you know what you're doing. And you may not to begin with. Next chart. Okay. Touching that trend line again. That is a whopper. I don't know. That's a lot of touches on this bearish resistance line. I'm sorry, bullish resistance line. We call it bullish because it's slanting upwards. And it's a resistance line because you're actually trading under the line, going up to it and stopping and coming back down. So it's resistance above the market and it's slightly upward slanted. Therefore, the trend of the line is up or bullish. Still waiting for a move down here. Gold looking for a move to the bottom of the big trading range since April. And then if it breaks out to the downside, even lower, down to 2178, 79, 2180, we'll call it. Silver now taking its time here after a whole week of sideways, bouncing off a little support that doesn't look particularly profound, but hey, 4 out of the last 7 days bouncing off that line. And today's the 7th day. So maybe it's going to bounce a little more. Don't trust it. Don't like it. Don't expect it. And I'm looking for support to be broken. And the downside objective off the head and shoulder top is 2450. Next chart, head and shoulder top in platinum. I went into great detail in the last couple of months, almost every single day. Downside objective is 810. And we now are back to a little resistance at the moment, but we're not particularly overbought at all. Not even close, 61. So it may rally a little more. Doesn't change my overall opinion. Bearish, downside objective, again, 810, next chart. We had a bullish engulfing at the bottom of this break and almost at the bottom of another bullish break engulfing for this, not the greatest looking, but I could call it a double bottom, but it just won't get its rear end in gear and start rallying strongly yet. We're up. We may have a minor new high close for the last 4 days, 3-4 days since the reversal. So I need a rally in the new highs for a week. And I think it's about to happen, maybe yet today. So where's it going to go? First stopping point might be 4.32 previous highs. And if that gets broken on the upside, we're going to go to our minimum upside objective, which would be 4.6. Obviously, nothing cast in stone, never is. We got a sell signal recently in soybeans. It is doing okay. We were long, got pushed out of our long position yesterday. Or no, actually that's this morning. And took a profit. So the stop was offset, filled. And we're now flat. And we're now still up slightly, but at a price that's lower than the offset, which is good. Now I'm looking at a minor downside dip that's going to keep going. I expect these lows, and this commentary basically bearish, longer term, intermediate term, but there are some minor bullish factors short term in some of the grains, but not much. So this has pretty much killed the bullishness. Sell signal happened at resistance or very close to it, and I'm expecting new lows. Oil, pretty much the same thing. Got up to resistance, got out of longs, making a new low again today since that date of August 30th. And I think the lows are going to be taken out and it's going to make a new low for the trend. The trend is your friend, but not forever. Next, meal. Looking at a resistance line, stopping it. Probably could draw a second line across that high and that high, and of course starting there. Let me do that real quick. Copy, paste the new line. I'm going to drop the top of it just a little bit to match that one. That's about right. That's good enough. I don't spend a lot of time on this. And raise this. Oh, I can do this. Ah, I see what happened. Okay, sorry. Put this one up a little bit. There we go, right about there. And this one is going to be raised also right like that. And it's perfect. Cross that high and now that high. So you really kind of have two lines. Both of them are kind of working. And we're below both lines right now. Looking for new lows. Corn, looking for new lows. Got close to overbought. Got close to the top of the resistance. Back in the same trading range it was in July. Had a bearish engulfing, but it's not a sell signal because we weren't up to 75 or higher, came close and down. New lows coming up. Wheat did get overbought, and we did get out of our long that we had only a couple of days in this last trade. Now it's challenging recent highs. So here we bought the low, we had a buy signal, I should say, and bought the low day. If we can get a little bit more strength and close above these recent highs, there's room for a little bit more rally, maybe up to 615. But again, the longer term trend basically is still down. I don't see yet any reason to talk about a long-term bull move or even intermediate, maybe short-term rally and then down to new lows. We're looking at cattle. A bullish engulfing almost today, but not oversold, so we're not going to get green. But I like bullish engulfings. It implies they're going to rally, and that wouldn't surprise me. We do have this double bottom. The low of the wick is down here, and I've got this little line connecting the two lows. So it's a good double bottom. The upside of the high end of the middle of the double bottom is right here. And as a result, and I'll put my little measuring stick on it, and I'll pick that high. There's two of them close together. It really doesn't matter much which one you use. And the upside objective would be, all the way up to 186.60 or higher. Objectives are not meant to be the end necessarily of a swing. It's just that the market should, historically, this is what happens, usually, get to that price. They're not necessarily going to stop moving up or down to the objective. It can easily go further. And we've got Miss Piggy coming down from a test of resistance, did get overbought. And yesterday was a new low and a new low close. So we're bouncing slightly, no big deal. Back to our E-mini. Still hanging on there. We're still a tiny bit lower. And again, that could change any moment. They're so close to having a bullish engulfing, and it would turn green. Again, I repeat, before I go today, I've got a bullish engulfing at the moment, and it's getting even better in the QQQ and the NASDAQ NQ September. Not in the Russell, not in the YM at this point, but we do have one in the E-mini now. We have been higher than yesterday's close, and that's generated at that moment a bullish engulfing. So we are long the E-mini at about 54.98, just almost exactly where we are right now. But the spider did not get into oversold conditions, so we don't have any green. The spider does have a bullish engulfing. We are a tiny bit higher a moment ago. Now it's down a few ticks. So the market's desperately trying to have some reversals. I'm not going to be surprised if it all fails and it closes lower than yesterday's close, in which case these signals we've got at the moment are going to fail and we have no buy signal. You have a great day. Profitable trading to you.